Welcome to the Deep Dive. Today, we're getting into the first quarter 2025 earnings call and the results presentation for Golar LNG.
That's right.
Our goal here is to really understand Golar now that they're, laser focused on floating liquefied natural gas, FLNG.
Basically, yeah, turning gas into liquid offshore.
Exactly. So we want to see where they stand, look at their recent achievements, their future plans, all based on the source documents.
And we'll look at the financials, the strategy, and sort of the broader LNG market picture, too. Got the call transcript, the presentation, plenty to dig into.
Okay, right. So Golar LNG, for anyone following the energy sector, they've made a pretty major pivot.
Oh, absolutely.
Streamline everything down to FLNG. They've got 3 units now. Hilli and Gimi are operational, and the Mark II is under conversion.
And they're completely out of the LNG shipping game now.
Yeah, gone. Market cap around $4 billion, net debt just under $800 million based on this report. So FLNG is clearly it for them.
Definitely. Selling off shipping, Avenir. It sharpens the focus. FLNG infrastructure, that's their core service now.
And the really big news this quarter, they landed 2 huge charters, 20 years each.
Massive deals.
One for the Hillis.
Sure.
It's moving to Argentina after its Cameroon contract ends.
Okay.
And the other is for the Mark II FLNG, the one being built, also going to Argentina. These are serious long-term commitments.
Yeah, 20 years. That's the kind of stability investors like to see. Predictable revenue, long duration, very valuable.
Right. So let's start this deep dive with the Hilli. They boast it's got the best operational track record globally for an FLNG.
And they're not wrong. 100% uptime. That's consistently perfect.
It really is remarkable. Since 2018, 132 cargoes delivered, over 9.2 million tons of LNG. That's a lot of gas.
It's not just luck either. That uptime shows real operational skill. Building them is tough, sure, but running them flawlessly, that's what charterers need. Reliability.
And the big win here, the final investment decision, the FID, for Hilli's 20-year gig in Argentina.
Locked in.
That secures, $5.7 billion in EBITDA backlog? And that's before any potential upside from commodity prices.
EBITDA earnings before interest, taxes, depreciation, amortization, key profitability measure. So that's a solid base.
And they've even got a dedicated team working on the upgrades for Hilli, the transit, getting it ready for Argentina. Shows they're serious.
You need that. Moving an FLNG isn't like moving a small boat. It's a huge logistical task for a 20-year deployment. That backlog provides a really strong foundation.
Okay, moving to FLNG Gimi, their second unit. It's in the final commissioning phase for its own 20-year charter, this one with BP, offshore Mauritania, and Senegal.
Right, the GTA project.
They expect the commercial operations date the COD when it officially starts earning, sometime within Q2 2025. So soon. That puts Gimi on the P&L.
Yeah, Gimi hitting COD is a major milestone. It shifts from being a capital sink to a revenue generator. Big positive swing for their financials.
And Golar's share of the contracted EBITDA from Gimi. About $151 million a year. That's assuming 90% capacity use.
And interestingly, if they produce more than 90%, Golar gets a proportional slice of that extra revenue.
Like a performance bonus, yeah.
Exactly. Incentivizes everyone, Golar and BP, to push for maximum output. Good structure.
They also got a hefty $196 million in pre-SICOD payments from the upstream partners. That followed a commercial agreement reset.
Right.
That cash is sitting there, ready to be recognized as revenue over the 20 years. And importantly, Gimi's already offloaded 2 LNG cargoes, so it works.
Those pre-SICOD payments are a nice cash cushion, reduces the upfront risk, and the successful offloads. Very good sign. Shows readiness.
And, highlighting the project's importance, the presidents of both Senegal and Mauritania did an official state visit to the GTA hub. BP execs there, too.
Oh, okay.
It really marked those countries becoming LNG exporters, a huge deal for them.
That really underlines the strategic weight of Gimi. It's more than just a commercial project. It's nation-building almost.
Definitely. Okay, now let's talk about the Mark II FLNG conversion. That's the LNG carrier Fuji being turned into a 3.5 million ton per year FLNG over in China.
The conversion out.
Yeah, the vessel's been divided up, work's progressing, liquefaction plant parts are arriving, seems to be on track for delivery end of 2027.
Using an existing carrier can be, cheaper and faster than a whole new build sometimes. Keeping it on schedule is key for that Argentina charter.
And that's the other big charter news. Tied to the Hilli FID, they also locked in a 20-year charter for this Mark II. It'll operate alongside Hilli in Argentina.
Right, a 2-unit hub.
This charter still needs final conditions, permits, licenses, that sort of thing.
Yeah.
Similar to Hilli's, but they expect those sorted within 2025. Maybe faster, since Hilli paved the way.
Makes sense. Leverage the first approval process.
And the CapEx to EBIT multiple for Mark II, around 5.5 times, they estimate. That's before any commodity upside. Suggests a pretty solid return.
Yeah, 5.5x is strong. Having both units there allows for efficiencies, too. It looks like a robust investment on paper, even without factoring in potentially higher LNG prices.
Which brings us squarely to Argentina, Hilli and Mark II together. The combined contract backlog is, well, it's huge, over 60 years of operation between them.
And about $17 billion in EBITDA backlog. Again, before commodity price benefits or inflation adjustments, that's massive long-term earnings visibility.
Absolutely locks things in. And a key player there is Southern Energy. They've got the 20-year fixed-price gas deals from Vaca Muerta Shale. They're handling the pipeline about 500 kilometers. They charter and operate the FLNGs from Golar, and they market the LNG on an FOB basis.
Right, FOB free on board. Buyer takes over once it's loaded.
Oh.
So Southern Energy is managing that whole chain, gas well to ship, a critical partner for Golar.
Now, here's where it gets really interesting for Golar. The upside potential.
Commodity link, yeah.
They get 25% of the LNG price for every dollar goes above $8 per MMBtu FOB. You look at current spot prices, TTF, JKM, often way above $8.
So if prices stay strong, or even moderately strong, that could mean significant extra earnings for Golar. A direct share in the market strength.
Exactly. It's not just a flat fee. Let's look at the terms again. Both 20 years, Hilli, $285 million annual EBITDA, Mark II, $400 million.
Crucially, OPEX is passed through. Golar isn't hit by rising operating costs.
Right, and there's inflation protection. Starting year 6, the EBITDA gets adjusted by 30% of U.S. CPI.
Which protects the real value over 2 decades. Very important.
And both have that 25% commodity upside kicker above $8 FAOB. That all adds up to that $13.7 billion baseline EBITDA backlog before you even add inflation or the price upside.
That structure, OPEX pass-through, inflation-linked, commodity upside, it's a really well-designed contract for Golar.
Let's drill into that upside a bit more. For every $1, the FOB price is above $8.
Yeah.
Golar expects about $70 million more in annual EBITDA, combined from both units.
$70 million per dollar.
Over 20 years, that's potentially $1.4 billion in extra EBITDA for each dollar above the $8 threshold.
That is serious upside potential.
They also built in some downside protection, though. If average annual FOB prices dip below 7.50 cents down to $6, there's a temporary discount.
Okay, how limited?
It's capped at $210 million total over 2 years. And there's a clawback mechanism if prices recover later. So, seems like a balanced risk.
Yeah, limited downside, but uncapped upside. That's a pretty sweet deal if you believe in the long-term strength of LNG prices. Very favorable risk profile.
But wait, there's more commodity exposure. Golar also owns 10% of Southern Energy itself.
Ah, okay. An equity stake.
Alongside the big upstream players. So this gives them another 10% exposure to commodity price moves, but with no caps, up or down.
Interesting. So direct price exposure through the equity.
They figure a $1 change in the gas price hits their EBITDA by about $28 million through this shareholding.
Okay.
So you add the FLNG tariff upside and this equity exposure. A $1 FOB price increase above $8 could mean roughly $100 million extra annual EBITDA for Golar.
So they're leveraged to the upside in 2 ways. Through the charter fees and through their ownership stake. It really aligns them with the whole project's success.
Now, Argentina, it's had perceived risks, historically, right? So Golar seems to have worked hard on mitigation.
You'd have to. What have they done?
Charters are under English law. Payments are all in U.S. dollars. They say they have strong backing from the current Argentine government.
Important political support.
And crucially, Hilli got the first ever 30-year non-interruptible LNG export license granted by Argentina.
30 years non-interruptible. That's significant.
Plus, the project is accepted into this RIGI protection scheme. It's a framework for big investments, offers regulatory stability, protection from new taxes, freedom to repatriate profits.
Okay, that sounds like a major de-risking element. Stability, tax protection, profit repatriation. Ticks a lot of boxes.
Yeah, and they expect similar protections for Mark II. Seems designed to give them comfort for the long haul.
Absolutely critical steps for a project of this scale and duration in Argentina.
Now, if you compare these Argentina deals to, say, recent U.S. LNG projects, it looks pretty good for Golar.
How so?
The gross tariff they're getting is higher than typical U.S. liquefaction tolls. The CapEx per ton for Mark II looks lower too, maybe $600 million per ton versus $1 billion or so for similar U.S. projects.
Lower capex, higher tariff.
Plus, they get those inflation adjustments and the commodity upside, which U.S. projects usually don't have.
Right. U.S. is often just a fixed tolling fee.
So potentially higher return on capital for Golar and better inflation protection.
Yeah, that comparison makes the Argentina project look very competitive, possibly superior returns on a risk-adjusted basis compared to many U.S. Gulf Coast projects.
But here's the thing. Despite all that, Golar seems to be trading at a lower valuation, like EV to liquefaction capacity compared to U.S. peers.
So the market maybe isn't fully pricing in this value yet.
That's what it suggests. Potential for the share price to catch up if or when the market recognizes the value of these contracts and the upside.
Yeah, that disconnect could represent an opportunity. Management clearly thinks there's upside there as these projects deliver.
Okay, shifting gears slightly. Their wider FLNG growth strategy. They're seeing strong interest, partly because shipyard slots for building these things are getting tight for the rest of the decade.
Scarcity value makes sense. So Golar's existing designs and expertise become more valuable.
They're chasing opportunities with good wellhead gas prices and, again, that potential for commodity upside.
Yeah.
Talking deals across their Mark 1, 2, and 3 designs.
And they're even considering letting charterers take equity stakes in the projects.
Yeah, to align interests further. Shows flexibility.
It does. A strategic way to maybe lock in deals.
They're also working with contractors now to get updated prices and schedules for their designs. And they've been inspecting existing LNG carriers.
Potential conversion candidates.
Exactly. Looking for ships like the Fuji or bigger at good prices for Mark 1 or 2 conversions.
Smart sourcing.
Plus, talking to suppliers of critical long-lead equipment, trying to reserve production slots to keep timelines tight.
Gotta lock in those slots for turbines, compressors, etc.
Their goal, at least one new FLNG EPC award engineering procurement construction this year.
Ambitious, but necessary to keep the growth pipeline full. Shows they're actively building for the future beyond Argentina.
And just to recap their designs, Mark 4 is around 2 million tons per year. Mark 2 up to 3.5. Mark 3, the big one, up to 5.4 million tons.
All using that Black & Veatch liquefaction tech. Having that range gives them flexibility for different gas fields, different scales.
Definitely. Okay, let's hit the Q1 2025 financials. Total operating revenues, $63 million. The FLNG tariff revenue was $73 million.
Interesting. FLNG tariffs higher than total operating revenue. Must be some other offsetting items or classifications.
Possibly, but the key is the FLNG tariff trend. Over the last 12 months, $336 million. Shows the core business is growing.
Right, and Gimi started adding cash flow too, with those $196 million pre-side invoices.
Total EBITDA for Q1 was $41 million. They did note it was impacted by lower Brent oil and TTF gas prices compared to maybe prior periods.
Yeah, shows that even with fixed fees, there's some indirect commodity sensitivity, perhaps through older contracts or minor elements.
Net income was $13 million, but that included $32 million of non-cash items.
Yeah.
Liquidity looks strong, though, about $680 million cash on hand.
Solid cash balance gives them flexibility.
And they declared a $1.25 per share dividend, returning some capital. Net debt around $800 million.
Okay. Manageable debt level, good cash position.
Big news on the financing front, too. They signed a $1.2 billion debt facility to refinance the Gimi.
Refinancing Gimi. Okay.
That's expected to net Golar about $370 million in cash proceeds. Further boost the balance sheet.
Frees up significant capital. They can recycle that into new growth.
They've also finished a rating process with credit agencies, looking for ways to optimize their debt further.
Smart move. Getting rated can open up cheaper debt options.
Looking ahead, they're projecting a run rate EBITDA of $835 million by 2028. That's when Mark II should be up and running fully.
Big jump from current levels. Shows the earnings power of Hilli, Gimi, and Mark II all firing.
And they think they can unlock over $1.9 billion in equity value just through refinancing, using those long-term contracts as security.
Leveraging the contracted cash flows to optimize the capital structure. Significant potential value unlock there.
Finally, let's touch on the chairman's remarks. He gave some historical perspective.
Yeah, the journey Golar's been on.
From shipping to FSRUs, now focused FLNG. Acknowledged it wasn't always smooth sailing.
Strategic shifts over the years.
He really emphasized the growth he sees in FLNG versus land-based LNG. Lower cost, more flexible deployment.
That's their core belief, the advantage of floating solutions.
Expressed a lot of confidence in Golar's market position, the backlog, the team, that long-term vision.
provides important context, shows their adaptability and their conviction in the FLNG strategy.
He also kind of put the market on notice, acknowledging Golar might be undervalued,
Oh,
and said the board would consider strategic alternatives if that undervaluation hangs around too long.
interesting. A signal that they're focused on shareholder value, potentially through M&A or other actions if the share price doesn't reflect fundamentals.
They're targeting deals for FLNG number 4, maybe even number 5, within this year. Still bullish on the gas market long-term, driven by global electricity demand.
Ambitious growth targets again.
His belief: Golar can create unique value, and he doesn't see much serious competition in FLNG for maybe the next 25 years.
That's a bold claim. Confidence in their technological and operational lead.
So, key things to watch for the rest of 2025. Gimi Siad, expected soon in Q2.
Critical milestone.
Getting those final conditions sorted for the Mark II charter.
Yeah, finalizing Argentina.
And continuing to optimize the balance sheet, recycle capital for more FLNG growth.
Those are the near-term execution points. Delivering on those will be key.
So summing it all up, Golar LNG is now very clearly an FLNG infrastructure pure play, pretty much.
Strategic focus is sharp.
The Argentina project with Hilli and Mark II is transformative. Huge backlog, decades of cash flow visibility.
Really underpins the company's future.
Plus that significant commodity upside potential, strong financials, and they're actively looking for more growth. It's a compelling story they're telling.
Absolutely. The combination of secured long-term revenue, the potential for price-linked upside, and a clear growth strategy. It's a powerful setup.
All right, here's a final thought then for you to chew on. LNG infrastructure is a very long-term game, right? And Golar's carved out a strong niche.
Definitely.
So beyond these current contracts, how might bigger shifts, global energy demand changes, price volatility over decades, new tech debt, how might that reshape Golar's path? Where else could FLNG go? Geographically, technologically?
Yeah, what's the next frontier for FLNG beyond monetizing known gas reserves? Could it play a role in energy transition fuels, blue hydrogen maybe? Lots to think about long term.
Definitely a complex and evolving picture. Thanks for diving deep with us today.